Hello, ladies and gentlemen. Welcome back to the newest edition of Levalytics on Video. I am your host, Jordan. If for those of you who don't not know me as Jordan, I go by Permeable Nino in the Twitter sphere. It's good to be back for another edition, you guys. And for the people that are subscribers, welcome back. It's good to see you guys. Hope you enjoy the video. For those of you that are new, welcome to the channel. And hopefully you guys like the work that I'm digging into today. And I'll try to keep this one simple and maybe short and sweet today. When I wrote the article that went on the Levalytics newsletter, which is at levalytics.substack.com, my intention was to make it short, sweet, simple. It did not turn into that. Hopefully the video ends up being a lot easier to chew on. But the reality is what I'm measuring today and what the goal of this video will be is to just create a simple way to better understand what market regime you are in within the cryptocurrency market. And the simple way that we're going to go about doing that is comparing the 90-day return of altcoins versus the 90-day change in altcoin, the average open interest for an altcoin pair. So let's get into it, right? So here, this first red line here, this is the 90-day returns chart, right? I don't really have to get into detail to explain to you how 90-day returns work, right? But the driving thing within a 90-day return calculation is price, right? That's the number one thing you need to keep in mind, right? So let's move into the change in OI over 90 days, which is the green line. And you can see them overlapping with each other, right? So this calculation, there's two different ways you can calculate open interest for a perpetual swap pair for an altcoin, right? You can do it by native units, right? For example, if it's the Bitcoin perpetual swap pair, you can just look at BTC value, right? The BTC, it's like, oh, this market is long 1,000 BTC or it's short 1,000 BTC. Or you can do 1,000 BTC multiplied by the current BTC price, right? That would be the dollar value of open interest. So this green line here, I'll hide the red line for a second. This green line here shows the 90-day percentage change in the dollar value of altcoin open interest, right? So that's just something to keep in mind, right? And the two things that drive the dollar value of altcoin open interest, right, are price and the number of open contracts, right? So those are the two things to keep in mind, right? So to some extent, the entire goal of what I'm going to end up doing here is I'm going to compare these two lines, right? Not these two lines, these two metrics, right? The 90-day percentage change in price for altcoins versus the 90-day percentage change in altcoin open interest, right? And you can see that they kind of move together in tandem, right? You can see that the shapes of these lines are similar. However, there are gaps between them, right? There are points in time where, for example, you can see the altcoin open interest line drags to a lower value than the returns price, right? This is usually during a deleveraging event, right? So you have all these different places in time where one will cross over the other, and these will show you different market regimes, right? That's the simplest way to put it, and you can better understand what's going on under the hood by looking at this, right? So looking at both of these lines, when I first got these two together and came up with the idea for this article, I looked at these lines and I was like, this is too it just is too much overlap. Even though you can see that there's a difference and one's going to lead the other in different points in time, the reality is that it's an eyesore. So let's hide both of these. And this purple line is what I call the ROI delta, returns minus open interest delta, right? So like I said, it's as simple as that, right? The purple line calculates the returns, 90-day returns, minus the 90-day percentage change in open interest. So positive values are periods where returns are greater than the change in open interest, right? These are periods like right now, right? These are periods where the main difference between the two is the fact that, right, both of them are driven by price, right? Open interest on a dollar basis is driven by price and open number of contracts. In this case, right, because returns are greater than the change in open interest, what that signals to you is that contracts were closed. This is a deleveraging event, as we like to call it in the crypto realm, right? And then you can see this was at the beginning of the bear market, end of 2021, beginning of 2022. So right at the top, this is the double top right here. From that last bull market, right? And this was the beginning of the end, right? Always at the top, there's always some sort of deleveraging event, right? So this was a huge deleveraging event. And then the entire bear market, actually, what you have here is a negative ROI delta, which tells you that open interest was getting added all the way down, right? there's a lot of like perpetual swaps activity, and people were not getting like, people were getting liquidated, but it wasn't just in such a gigantic, fashionable way the way it was at the beginning of the bear market. So during this period, yeah, you basically all the way up till the BTC ETF got approved, you had multiple, like a year and a half basically of nonstop open interest outperforming the change in price, right? So that just tells you that there's a lot of perpetual swaps activity and that open interest was increasing over this time and that people were getting actively trading, right? And then here in October 2023, right, the Bitcoin ETF got approved and markets started ripping, right? Then you start getting positive values again, right? You'll find out later in this video that this was basically kind of a short squeeze / spot driven rally at this point in time. And this was, we've talked about this in other videos too. This was the healthiest rally throughout the last bull market. This was, from October till March, this was like 5 straight months of nonstop pumping. And right, so with this positive value, you can see this is healthy, right? You want the price to be going up while this is going on, right? And then top gets put in when people start levering up again. So then you get deleveraging, right? Right after the top gets put in, like I said, most market tops, they are marked by a period of deleveraging right afterwards. And you'll see it multiple other times throughout this video. Not throughout this video, even on this chart here, as I'm going to talk about it. You see positive values here, deleveraging right after the big run up, and people got a little too bullish here, right? Then you get this period where people start to tack on leverage leading into the presidential election, right? And then you got this disgusting move up where open interest just went completely insane, right? Let's go look at the open interest just on its own for the election. The average altcoin pair open interest went up 215% near the top. This was the biggest value for this data set here. So, it was just a gigantic move up in leverage. And compare that to, it's just like, here's the red line. You can see just this gap. You see this, like all this white space between the red line, which is the 90-day percent returns, versus the green line, which is the 90-day percent change in open interest. It is gigantic. That just tells you that people were really levering up because, like I said, the number one difference driver between these two lines is the number of contracts that are opening or closing for perpetual swaps. Okay, so let's close that again. Go back to purple, right? So like I said, this negative value just shows that a ton of contracts were getting opened, right? Then you get blow off top, right? Deleveraging event in February 2025. So that's like right when he got inaugurated. This was when he started like announcing the tariffs and everything, and everything started melting down basically, right? And then once again, we go back into negative range once crypto bounced, and we went back and got this fake double top right here, right? And then you just have this whole period of sideways between May 2025 to October 2025. This whole period was basically just leverage accumulating as the market goes sideways. And then, of course, a deleveraging event, and we get back to a positive ROI delta value, right? Right after the deleveraging event, boom, October 10th, positive ROI delta value. And ever since then, we have been in a deleveraging regime. We really have not tacked on that leverage again. So that's something to keep in mind as I talk to you guys about the different market regimes throughout this video. So let's kick things off and get a little bit more specific. So the meat of this article is where I start to compare the 90-day returns versus the ROI delta value, right? That way you can see, okay, is leverage, like I said, the purple line, which is the ROI delta value, it really shows you on net what is going on in the market. Is leverage getting added to the system? And it's not just price driving the value of open interest up, right? So you can see how that pairs with price action though, right? Because if price is going down and leverage is going up, what does that tell you? People are most likely getting short, or long traders are continuing to trade and get liquidated, right? So there's all these different dynamics that you can play out along the way. So what I'm going to do is I'm just going to walk you through from this chart from start to finish and just talk to you about the different market regimes, right? So that way we can better understand what exactly is going on. Okay, so in this situation, right, you have in November 2021, you see here, right at the double top of the last bull market, you've got the 90-day percent returns at 97%. for perpetual swap pairs on Bybit. But at the same time, you have a negative ROI delta value. What does that tell you? That people are levering up at the top. You see all this white space between the two of them? That is a major red flag. Boom, market top, right? And then right after that, this is a lever. In the article, I call this a leverage rally. This is driven by leverage. This pump was driven by leverage because price is up, but leverage is up more than price, right? So that's something to keep in mind. Then obviously right after the double top, these two flip over each other. The 90-day returns get into negative territory, right? And this is the deleveraging period. This whole period where from let's see, November 2021 up until March 2021, right? You have negative 90-day returns paired with a positive ROI delta value. That tells you that we are just getting smacked down. This is all the people, all the levered traders that just got completely steamrolled in this period. And then, though, you kind of get into this deep, long duration period where you have a negative ROI delta, which tells you that people are levering up, right? And that begins March 16th, 2022. Yeah, I think that's right. Yeah. Somewhere around here. So like right before the market goes off a cliff, right? You have people beginning to lever up again while 90-day returns remain persistently negative. So you basically have, this is the reason why this bear market probably took so long to resolve itself, is that you constantly have negative returns, but people are continuously levering up, right? There's just a lot of action going on here, right? You can see negative red line, negative purple line, right? So there's just a lot of battle going on here. And you basically, until the market bottom in January 2023, you finally get back into positive 90-day return values, right? And you still have the market being levered up here, right? This is a levered rally, right? This is just, it's the same thing over and over again. I think there was a period in time that, I think people have become slightly, more I know people keep saying that, like because of hyperliquid success and all that. I think retail traders, at least though in crypto, have slowly become disenchanted by perpetual swap trading and trading with leverage because they've just gotten steamrolled and lost so much of their money on it over time. But this period, if you were not around 2022 through 2023, it was a period where I think a lot of people still didn't really have that horrible taste in their mouth from perpetual swaps trading. So it's not that surprising to me that you'll see a lot of people levering up on this whole bear market on the way down. And sometimes people I'll talk about it a little bit later, but sometimes you'll see that people were levering up at the top, getting steamrolled. Some people were levering up at the bottom, getting steamrolled. Like, for example, let me show you something. I have a better metric for this later on that I'm going to show you. But you see these spikes down on the purple line. These are periods where people are obviously levering up, right? These big spikes down show you periods where there's a lot going on. This happened right before the FTX debacle. This was at the bottom of this little, like, whatever move down here. And then, see this move where the ROI delta breaks down. A lot of people are levering up right before the price rips upwards. So a lot of shorts got it's just a lot of shorts getting steamrolled in January 2023. So a lot of people getting steamrolled there. But let's get back to it. Okay, so you get this levered move out of the bottom after some shorts got steamrolled a little bit. And you get into this period in the thick of 2023, from like May 2023 up until October 2023, where you're back to a regime where you have negative 90-day returns and negative ROI delta, which tells you that there's something, there's a bunch of leverage building up here. It's basically it's 5 months of just leverage building up in the system, and probably people getting a tad complacent from all the sideways that was going on in the market, right? And then, of course, we finally get a monster breakout. You don't really know what actually is going on here, though, right? Because like I said, during the bear market, you can get leverage building up and it can be longs getting liquidated all the way down. You don't really know until after the fact, but you got your response here after the price broke out here, right? You can see 90-day returns flip positive and the ROI delta flip positive, which tells you that it's a spot-driven rally, right? Because the ROI delta going positive tells you that returns are greater than open interest, right? And because of that, that tells you that contracts are closing. And because contracts are closing, that signals to you that people are likely getting liquidated, and it's just mostly a spot-driven rally at this point. And you can see that it looks really healthy for a long time here, right? All the way from November 2023, end of October, all the way till February 20th, right? Like right here where Bitcoin was at like 52,000 and the top was at 72,000, right? This only till the end, right? you didn't really get this like huge spike down. And see, the spike down finally put in the top. Otherwise, this was a beautiful rally. Like when you get both of these positive and you have a large gap in the 90-day returns, that's exactly what you want to see. That is a good looking rally, right? But unfortunately, the fun eventually has to end. The latecomers and the levered apes have to jam the price higher, always at the last second, and that'll put in the market top. And this is where you get the big gap where you have the high 90-day returns, but it's also driven by leverage at this point. And that is your signal that the end is near, basically, right? So then after that, you can see that the 90-day returns just start slumping down. You see this? Just going down from March 12th, 2024 back into negative territory as you get into summer 2024. And yeah, summer 2024 was a pretty crappy period for crypto. You know, altcoins bled out, Bitcoin was sideways. It was kind of just a really lame period, and there was nothing to be too excited about. And right during this period, you go back into ROI delta negative, which means leverage is building back up finally after a short period of deleveraging. Actually, I forgot to mention that. You can see here after blow off top, the purple line, after the blow off top here, the purple line goes back to positive, right? ROI delta goes back to positive, which tells you that this is a deleveraging period, which makes sense. Obviously, there's a deleveraging event always after people get too levered up. And then you can see as the summer goes on, though, leverage is building up in the system as we move towards the election, right? And, you know, we've talked about this before, but the election was like a huge period where you actually had 90-day returns negative and the ROI delta negative. You know, like I said, you would like to think it's shorts only, but I know for a fact going into the election, it was just a huge period where people just got extremely levered up and people were levered up to the gills. So you just had that combination going on. And like I said, this is why I mentioned before that sometimes you don't know until after the fact what exactly was going on when you get a negative 90-day return and a negative ROI delta. And then, you know, the price broke out. You got the huge post-election breakout because everybody thought Donald Trump was coming to save crypto, basically. Lo and behold, that was not the case. We all know that now, that prices are down 85 to 90% more than a year later, right? But you see this gigantic gap. This is just a huge bearish gap, right? You know, see how low the ROI delta is and how high the 90-day returns are. This just tells you how much of a levered rally this was. This was not healthy. And it's no wonder that basically everything died off after this. This was a blow off top. This is exactly what a blow off top looks like. You kind of got it up here in November 2021 a little bit too. This one was just way uglier. I mean, this is a ton of leverage. A lot of people getting way too excited and getting steamrolled, right? And then, as always, prices go negative, right? Returns go negative after this as we went into Liberation Day where Trump was doing all the tariffs and he got inaugurated into the White House. And you can see the purple line ROI delta flips back positive. This is once again a deleveraging period, right? A lot of bearish price action here. And then the market once again recovers. You can see the 90-day return starting to recover a little bit. And actually in this period, you had a period, this was negative 90-day returns and a negative ROI delta right up here, 105. Price ripped upwards. This is people probably getting a bit short. No, it's actually not people getting short because you can see the move down here actually, that people actually were getting long. This move up was driven by leverage actually. And you can see that, right? You start getting the positive 90-day return values and the negative ROI delta values. Negative ROI delta values, like I said, tells you that there's leverage in the system and that there's leverage building up. If price is up and leverage is up, that tells you that there's pain. There's people who are off sides, and that you need to be aware of that. And you need to be careful about that, right? And then, of course, the deleveraging event occurred on October 10th. And you can see purple flips back to positive. We are in a deleveraging territory. 90-day returns flip negative, and they have basically been that up until the beginning of May, where we have a positive ROI delta, which tells you that the market is deleveraged, right? Because returns, 90-day returns are greater than the 90-day change in altcoin open interest, right? And you have positive 90-day return values, right? So this is the golden ticket here, right? This is what you want to get excited about. This is what you want to track in the market. And like I said, the healthiest rally that we had in the last bull market, if you want to call this new pump that we have going on a potential new bull market or a bear market rally, whatever you want to call it, this is a very healthy market regime. This is the one that you want. This is the you want the price going up with not a lot of leverage getting added to the system. By the time, if this thing pumps and you start getting like prices, 90-day returns above like 100%, and then the purple line starts ripping downwards, you're getting into late innings. You know that you already caught the meat of the move, and it's probably time to start cashing in your chips. And this is why I've been so excited. This is kind of why I've been talking on Twitter a little bit more bullishly. I'm trying to remain measured, to tell you the truth, when I start talking about crypto markets, because I'm obviously wrong. But the fun part about doing Levalytics is that, always on the Tuesday issue that comes out, I show you the P&L of the portfolio. So it's like, if I'm wrong, then obviously you get to see that the portfolio is down. Right. So it kind of all speaks for itself. That's the nice part about the research. People are like, oh, like what is his actual positioning, despite the fact that he's like bullish or bearish at any point in time. You can just go look at it. And it's actually also on the dudeterminal.com website. If you guys also want to go check that out too. But yes, this period that we're in right now is very exciting, and we just started it, right? Like I said, this is a spot-driven rally potential here. This is really something to pay attention to, and I think this is why bears could possibly be extremely offsides. This is very good looking here. So, yeah, so I'm going to move on to the next thing. And like I said, the main reason why I built this next tool is because this whole bear market period, you had March 28th, 2022 up until January 20th, 2023. It was like almost an entire year of this double negative regime where you had a negative ROI delta with people tacking on leverage and negative price returns. And I was like, you know what? There's got to be a bit more nuance to what's going on here than what I'm seeing, right? So let's just take a look, and I'll show you the new metric that I built to. It's kind of like a backup metric to look at in conjunction with the combination of these two. If any of this was confusing, by the way, just let me know, drop a comment, and I'll figure out a better way to describe it in another video. But like I said, before we move on to the next metric, actually, I just want to make sure that you understand, right? The ROI delta is returns minus OI, right? So if it's negative, that means that more OI has been added than prices pumped, which means that there are people levering up in the market, right? And then you get to a positive value that tells you that returns are greater than the change in OI, which tells you that people are not that levered up, okay? It's that simple. You just go back and forth on it. Like I said, the large gaps between them, these are bearish gaps. This is a very bearish divergence, right? You have a lot of people levering up and the price is up. This tells you that this is not sustainable and that there's a lot of weak hands in the market. Once again, a lot of weak hands up here when you have this gap between the two where you have a negative ROI delta because leverage is getting added. And it happens over and over again. It happened at the 2021 market top too as well. So yes, I always want to make sure that you guys understand the material and the stuff that I'm publishing as much as possible. If there's anything confusing about that, like I said, just let me know. I'm moving into the next metric, the final metric. And like I said, trying to keep this video short and sweet so you guys go enjoy your weekend. But I do think that this is a really valuable exercise in understanding the market regimes that you're in and what the mechanics of what's going on under the hood are very important. And the best part about this tooling here, it's very simple, right? There's a lot of people trying to overcomplicate things. The market's obviously becoming more sophisticated over time. But at a high level, I think if you just really can understand what is driving the market at any given point in time, you don't have to do so much thinking. Anytime you are required to be overly discretionary, it's a tax on your brain, and it makes it more difficult for you to make good decisions in the market, right? So anytime you can simplify your tooling, the better. That's what I'm trying to do here for you guys. And like I said, if I didn't accomplish that based on my explanations, just let me know. Okay. So this is the 90-day Z-score of the ROI delta. Okay, hold on one second. Let me change the chart here really quick. And it's really simple. I'm kind of ignoring the positive high values. And what I'm going to do, actually, no, maybe the positive high values actually can provide some alpha. Hold on one second. No, I don't really think they do as much. The negative ROI delta values, though, what they do is they show you periods where the market's getting over-levered, right? Where people are getting in front of their skis a little bit. And you can see a lot of this action actually occurred during 2022, during this bear market. And the reason why it happened a lot is because the market was levering up a lot for some reason. And I guess it was just a combination of bears and bulls, getting liquidated. So we're going to talk through each top. So you can see here March 2022. You can see low value here, -2. So like anytime it's 2 standard deviations below the mean, that's a signal that something's going on, right? So boom, this is a top right here. You see that? And then I think this one's another one. It's tough to see that one. Let's go down to this one. On August 24th, August 26th, 2022, you have a little bottoming act here. This means that people are probably shorting this area, and that's how we got that bounce up here, right? And then once again, the FTX debacle. This is the one that I was trying to hint to you before when I was looking at the purple line, the ROI delta, just the vanilla one. On the last chart, you can see -2, -2 on November 5th, 2022, right before the market rug. There was a lot of leverage in the system. People were over leveraged to the gills here, right? That's a big problem. You can see that people will get liquidated, right? Because the Z-score value just rips upwards. Anytime the ROI delta values start moving upwards, it tells you that positions are getting closed, basically, right? So then once again, you also have a -2 ROI delta value on January 1st, 2023, and that is right before the market ripped upwards. So you can see that people are levering up way too much. And then, so you can see that we go through this period from January 19th, 2023 up until February 2024. You basically had an entire year of what I would consider pretty healthy, unlevered price action, right? This was an extremely healthy period all the way up until March 2024, where it was just like a lot of spot-driven price action. You had the ETFs kick in, which was a beautiful 5-month rally. We took that for granted at the time, but then altcoins got clobbered after that. And then you can see, boom, you have another top here, though, at -2 or -1.91. It's close enough, right? So you getting a negative, like a deep negative ROI delta Z-score value, right? And you can see over time that the ROI delta Z-score is kind of just drifting downwards as you get into the presidential election, which just tells you is that the ROI delta value is trading consistently below its 90-day moving average, which is not good. And that just tells you that over time, I think the market was just starting to get weaker and weaker, and people were just resorting more and more to leverage as people were getting desperate and leading into the election, right? So here is another example, though, of a -2 print. This was at the top here, July 24th. 66K, boom, rips downwards, right? So you have a few of these. Here's another one. September 28th, boom, downwards, price dumps, ROI delta Z-score goes back up, which tells you that people were getting liquidated. Here's another one, more liquidation, right? Yeah, here's another liquidation to November 3rd, right before the election. And then boom, obviously this goes super deep values. And when you look at it as a Z-score, what is the Z-score on this thing? -5. For the ROI delta Z-score, it's insane. Sell everything, get out, and just wait for the next bull market at that point. And you can see that ever since then, we've kind of just been floating above zero for the 90-day ROI delta Z-score, which just tells you that the market's been like deleveraged for the most part. I think it's I don't think you need to overcomplicate that. And, like I said, I've told you guys in multiple videos, multiple articles, that I think that this U.S. presidential election, that December 2024 following the election and the blow off top that happened there was just a blow off top. That's exactly what it was. And that's why these ROI delta Z-score values are not surprising, right? Because there's just not much going on here. When there's a lot of leverage, when people are aping and stuff like that, then you'll start getting these negative prints again. But yeah, like I said, when you get these high prints up here like this, yeah, maybe this is a deleveraging event, but I don't know. There's just not much to glean from the higher values. I think the lower values are the ones you really want to pay attention to when it comes to the ROI delta Z-score. But like I said, this is a good complementary tool to this initial one, right? Because it's hard to glean what exactly is going on here outside of the fact that it's an extended bear market. There's a lot of leverage in the system and prices keep going down. Like I said, part of the reason why I came up with this tooling, and like I said, some of the stuff is not really things I came up with, but the reason why I'm talking through this tooling is because even if all you do understand is that there's a lot of leverage in the system and that returns were going downwards during this bear market, that at least tells you, like, it just helps you better understand what's going on the next time you start getting these value prints, right? But yeah, so that is what it is at today. And like I said, the most exciting thing about these findings is that I think we are in a spot-driven, low-leverage regime while price is pumping. So that is very, very exciting. And I think there's an opportunity. You never know how long or how hard it could go. But on multiple articles as well back, I've talked about how the market is just completely fleeced of leverage at this point. So seeing these prints right here, right? Seeing these prints are not that surprising. And the price is up. Obviously, if you know the 90-day returns are up, and then you already knew going into this that leverage was deep out of the system. It's not surprising to see these values. And yeah, but it does get me excited. And I really do think that there is an opportunity for a very meaty bull run. And, I'm not going to go ahead and say new all-time highs, but I do think there is an opportunity for a very healthy rally here. The market has been completely fleeced of leverage. I know people think, and also, like I said, just combine that with the fact that there are animal spirits going on in traditional markets as well with what's been going on over there. So I think it's an exciting time. And I really do think that this is one of those periods that I think crypto is going to do pretty well. And if I'm wrong, it'll show up in the Leveletics portfolio performance. Otherwise, yeah, guys, if you have any questions, feel free to reach out. If you're new to the channel and you like the content, please subscribe. If you have any feedback, feel free to drop it in the comments, message me on Twitter @PermabullNino, or comment on the leveletics.substack.com newsletter. But yeah, guys, I really appreciate the time, and I hope you have a great weekend. Thank you so much. Bye.